Welcome to the July 31st, 2023 Advance Report for McGowanGroup clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman with your fast-paced tour of the global financial markets. I'm also president, McGowanGroup Wealth Management, a team of 10, the team that cares, based in Dallas and serving affluent families across the nation. I'm glad you've joined us for the YouTube McGowan Group. This update is designed to help our clients make great decisions in the year ahead and to cover portfolio strategies that we use in our models here at McGowan Group Wealth Management, designed to pay you superior cash flow with extraordinary capital gain potential. And we're starting to see signs, as Kramer declared this week, that it is definitely a bull market. And you could see right here from the October lows, this is the March correction with the banking crisis for 4 venture capital California-based banks. The fourth one was solved this week. Bank of California took over PacWest. And it was a regional crisis, and actually very limited in scope to companies that focused on venture capital, banks that focused in that category. So that's declared over, and you could see the Dow making a 52-week high this week. What happened? Well, ironically, the Fed did raise rates, but you didn't have a meltdown. You kind of had a melt up. Why? Because Jerome Powell, in his press conference, signaled that they might be done raising rates. We covered last week the fact that inflation is 3%. That was confirmed again this week with the Personal Consumption Expenditures Index, one of the Fed's measures. And with that confirmation, he, by his own definition, is about 3% too high. The Fed governors are projecting that they're taking this to 2.5% by 2026. What happens? You raise the net present value of future cash flows. If you do the Taylor's theorem or Excel spreadsheet on that, what it tells you is future cash flows are worth a lot more money as they bring that rate down. And that's the direction for 2024, 25, and potentially into 26. Well, where are we going next? Here we've got the biggest drawdown that we've seen in recent history for inventories. This is Cushing. That's one of the oil pipeline capitals. And in the inventories at Cushing, down 4 weeks in a row. There's a gasoline shortage in that their inventories are way low, which means they'll order more oil. And what does that mean for energy infrastructure? At 5 times cash flow, roughly for the whole industry, those companies are the least expensive part of the S&P 500, and they happen to pay the most cash flow. And the direction in dividends, according to Bloomberg projections, is that those dividends will continue to rise. They are awash in cash. The midstream pipeline companies have more cash flow above their dividend than ever before in history. They're going to raise the dividend, they're going to buy back shares, which kind of puts a floor underneath the price, and at the same time, they may start to buy each other. We're seeing more merger and acquisition activity in the energy infrastructure assets, evidenced by ExxonMobil taking out the major carbon capture pipeline company, and Warren Buffett adding 50% to his share of liquid natural gas exportation at Dominion. All right. This is, and I want to re-emphasize this, this is the best fixed income track record that I've been able to find in my career. Guy came to see me in 1992, said, "Hey, do you know what a Brady bond is?" I said, "I have no idea." He explained it to me. This is what popped out of the Latin American debt crisis in 1989, named after Treasury Secretary Brady, who had to bail out the money center banks back then too. It's not an uncommon occurrence. But it left a bunch of bonds trading essentially at half price, paying a double-digit yield. So Fast forward here. This is the tightening cycle. So this is a global high yield bond fund that pays income every month. It's a basket of bonds. It's now at a deep discount after the Fed tightening cycle, which is going to reverse according to all the information we have, and you tend to get a nice spike. That's after COVID. This is the 2008 meltdown. Notice how fast it recovered. This is with dividends reinvested. It is a 30-year track record at a 9.5% average annual return if you reinvested the dividend. That's the power of cash flow. Global high yield as an asset class is extraordinarily cheap. Our estimates are they're 75% of par value with a big old yield. And you get paid every month to wait. And if they lower the short rates, then you could have a large capital gain. We have 4 global high yield managers that we like. Dallas, North Texas. So this is representing North Texas home prices. This is the crisis last year, when mortgage rates went to 7%, and they're still about there, and you had a 10% decrease in the value of your home here in North Texas. And surprise, what's happened? Wow, this is positive. Home prices in North Texas actually moving up nicely, and this is the most recent S&P Case-Shiller Home Price Index piece. GDP came out this week at 2.4%. Who told you that? YouTube McGowanGroup. That's why you subscribe. When did we tell you that? We said it's going to be over 2%, and we said that a month and a half ago. Wow, how did we know it? Atlanta Fed real GDP. That was an extraordinary piece of forward data where we did our homework both on inflation going to 3, and the whole premise has changed in the current markets to a soft landing. What does that mean? That means that you don't get a recession, and that's been accepted. We told you a year ago that it looks like you're not going to have that looming recession. Remember, it was in every headline. And we went in and did our homework and said, no, this is actually, things look pretty good. And when we did the Atlanta Fed research, economists expecting recession and Atlanta Fed halfway through the quarter would tell you, it's going to come in at about 2% economic growth. That's a Goldilocks environment. Healthy economic growth and low inflation. I'm Spencer McGowan, President, McGowanGroup Wealth Management. Get your time for a brainstorming session by going to networthradio.com. You'll see the charts, graphs, and the longer broadcast, but you can also contact us there, set your time for your Zoom or in-office meeting. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.